The market volatility surrounding GameStop and other securities has highlighted how many people feel that the cards are stacked against them and that market participants, like our witnesses, hide the ball. Mr. Taneve, you explained that Robinhood restricted transactions in certain securities to meet demands coming from your clearinghouse. And yet, on January 28th, you represented to the media that there was no liquidity problem. Isn't it true that being concerned about having enough capital to meet deposit requirements, isn't that a liquidity problem? Or could you just answer yes or no?
Chairwoman Waters, I appreciate the opportunity to address that.
Just yes or no?
We always felt comfortable with our liquidity and the additional capital that Robinhood raised.
Please answer yes or no.
We always felt comfortable with our liquidity.
I don't have time. I just need a yes or no answer.
I stand by my statement. The additional capital we raised wasn't to meet capital requirements or deposit requirements.
Gentlemen,
excuse me.
I'm reclaiming my time. This liquidity problem had real consequences for your customers, but I wonder if they were all that surprised. Between December 2019 and December 2020, Robinhood customers experienced monetary losses due to system outages. Customer accounts were reportedly compromised. The firm repeatedly failed to testify its best execution obligations, and it misled its customers regarding its revenue sources. It seems retail investors often get a bad deal at Robinhood. Mr. Taneve, also, while you testified today that, quote, Robinhood's customers benefit greatly from payment for order flow, quote unquote. In December 2020, the SEC charged Robinhood for not disclosing that it was getting paid to send customer trades to Citadel Securities and other market makers, and for not seeking the best terms for its customers' orders. Robinhood provided such inferior trade prices, it cost your customers over $34 million. Is your testimony after Robinhood paid, is it your testimony after Robinhood paid the SEC $65 million to settle those charges, that this conflict of interest is in your customers' best interest? Yes or no?
Chairwoman Waters, first let me say regulatory compliance is at the center of everything that we do. We've made mistakes in the past. I'm not claiming that.
Answer yes or no to that question.
So Citadel Securities is an important counterparty. Nobody's denying that. The reason that...
Gentlemen, can I answer yes or no? I'm reclaiming my time. Meanwhile, Mr. Griffin, Citadel's role in this event also raises significant questions for policymakers. Citadel Securities pays Robinhood tens of millions of dollars to process trades by Robinhood's customers. This relationship gives Citadel Enterprise key non-public information as to direction and volume of trades by retail investors. Your firm makes use of private exchanges called dark pools and other off-exchange trading to trade large sizes without moving the market against you. In fact, at some point last month, 50% of all trades occurred in dark pools or via OTC off-exchange trades. Your business strategy is designed intentionally to undermine market transparency and skim profits from companies and other investors. One problem, though, Mr. Griffin, is that we don't really know how central your firm has become to the capital markets. Mr. Griffin, does Citadel handle 47% of the U.S. listed retail volume? Please, yes or no.
Excuse me, Chairman Waters, what percentage? I couldn't hear that number.
47%.
So, Chairman Waters, to the best
yes
of
or no?
So the best of my knowledge, we handle in excess of roughly 40% of all retail volume.
Thank you very much for reclaiming my time. Mr. Griffin, on January 27, the Citadel execute 7.4 billion shares for retail investors, which would be more trades than the average daily volume of the entire United States equities market in 2019, yes or no?
Chairman Waters, that was my written and oral testimony.
Thank you very much.